It all began with a single signature, a decision made behind closed doors, setting the stage for a dramatic shift in the global economic landscape. This move would soon ripple across financial markets worldwide, sending shockwaves that would be felt for years. March 4, 2025 officially marked the first day of President Donald Trump's new trade war. While markets were prepared for turbulence, no one could have predicted the sheer devastation that would follow. Investors braced themselves for uncertainty, but not for the catastrophic consequences that unfolded. This wasn't just another political stunt. It was economic warfare on a scale that could potentially reshape the entire global order. The moment the bell rang on Wall Street, the world watched in horror as trillions of dollars evaporated within seconds. Panic spread like wildfire as a sell-off of historic proportions took hold of the markets. The first day of Trump's trade war had begun, and the aftermath was felt not just in stock markets, but across every facet of the global economy. The damage was swift and severe, catching even the most seasoned investors off guard. As the dust began to settle, questions emerged. Was it too late to reverse the damage? Had the regret already set in? Before the markets even had time to adjust, the damage was already done. Within mere minutes of the opening bell, Wall Street was in freefall. The S&P 500 experienced a catastrophic 2% drop in a matter of seconds. In just one morning, $3.4 trillion in market value had vanished, marking the beginning of one of the most brutal days in recent financial history. Investors, who had previously celebrated the post-election rally under Trump's leadership, watched helplessly as their portfolios shrank in real time. What followed was nothing short of a bloodbath. The sell-off wasn't just rapid, it was savage. The Dow Jones Industrial Average, which had been one of the pillars of U.S. economic stability, suffered one of its worst days in years, plunging a staggering 800 points. Institutional investors, who had placed their trust in a strong and stable market, now found themselves frantically dumping stocks in an effort to mitigate losses. Meanwhile, the Nasdaq Composite, once a symbol of America's technological dominance, officially entered correction territory, dropping 10% from its December peak. This wasn't just a temporary blip, it was full-blown panic on a global scale. But the chaos didn't stop at stocks. The fear in the markets was palpable. The CBOE Volatility Index, often referred to as the VIX, spiked to its highest level since December 2024, signaling that investors weren't merely reacting, they were fleeing. The optimism that had fueled one of the longest bull markets in history had evaporated overnight, leaving in its place a sense of dread and uncertainty that would linger for months to come. What was even more unsettling was the fact that the sell-off wasn't limited to high-risk speculative companies. No, it was the titans of American industry, companies once thought to be untouchable, that found themselves in the crosshairs of the market's fury. NVIDIA, the darling of the artificial intelligence sector, saw its stock plummet sharply as investors questioned the future of U.S.-China relations and its potential impact on American tech companies. Alphabet, the parent company of Google, struggled to stabilize as its value dropped amid fears over regulatory crackdowns and international trade tensions. Amazon, which had once epitomized global commerce and technological innovation, found itself vulnerable as the trade war threatened to disrupt its vast network of suppliers and customers. Even Tesla, a company already facing challenges due to supply chain disruptions, saw one of the most dramatic drops of the day, losing a staggering 45% of its value from its late 2024 high. Investors who had once rallied behind Elon Musk's ambitious vision now found themselves pulling their money out, fearing that the worst was still to come. Wall Street, once confident in the stability of Trump's economic policies, had placed its bets. It believed that the president would never jeopardize the very economy that helped him secure a second term. Yet by the end of the trading day, those bets had been lost. And for investors, businesses, and ordinary Americans alike, the real pain was just beginning. Before we dive deeper, please take a moment to like, share, and subscribe to our channel for more insights into geopolitics, economy, and changing global dynamics. Now let's continue. The events of March 4th weren't a complete surprise. For months leading up to that fateful day, experts, economists, and even members of Trump's own administration had warned that such a drastic move could have far-reaching consequences. Despite these warnings, Trump pressed forward with his plan, determined to deliver on a promise that he had made to his supporters. On March 4, 2025, he signed one of the most aggressive tariff policies in modern history. The numbers were staggering and nearly impossible to ignore. A 25% tariff on all Mexican imports, another 25% on Canadian goods, and a fresh 10% levy on Canadian energy exports. This move sent a clear message to America's northern neighbor. No industry was safe. Then came China. The existing 10% tariff on Chinese goods, already a point of contention between the two largest economies in the world, was doubled to 20%. This escalation intensified a trade battle that had been simmering for years and threatened to spiral further out of control. But behind these seemingly straightforward tariff numbers lay something far more alarming. It wasn't just governments that would pay the price. It was businesses, consumers, and supply chains that had spent decades intricately connected. These tariffs meant that American manufacturers would pay more for raw materials. Small businesses that relied on affordable imports would be squeezed, and average American households would soon feel the effects directly in their wallets. Trump, as always, had his reasons for the tariffs. He argued that drugs were still pouring into the U.S. from Mexico and Canada at unacceptable levels, framing the tariffs as a national security measure. But was this truly about security, or was it an economic war disguised as patriotism? One thing was certain: America's trading partners were not going to take this lying down. The first to retaliate was Canada. If Trump thought Canada would hesitate in the face of such aggressive tariffs, he was gravely mistaken. Within hours of the tariffs being announced, Prime Minister Justin Trudeau stood before the nation, not with a plea for negotiations, but with a direct and calculated counterstrike. Canada imposed a 25% tariff on $100 billion worth of U.S. goods, an immediate $30 billion worth of tariffs, with another $125 billion waiting to be deployed in just 21 days. But these numbers were just the beginning. Canada had carefully chosen its targets, striking where it would hurt the U.S. economy the most. The first blow came in the form of energy tariffs, a 25% export tax on electricity flowing to 1.5 million American homes in Minnesota, Michigan, and New York. If the situation escalated further, Canada threatened to cut off electricity exports entirely, plunging parts of America into darkness. The nickel embargo was next. As one of the world's largest producers of nickel, Canada announced it would stockpile its nickel rather than sell it to the U.S., disrupting America's supply of this critical metal used in military equipment and batteries. Trudeau didn't mince words, stating, "Trump has repeatedly hinted that Canada should become the 51st state. That is never going to happen." The implication was clear. This wasn't just about trade anymore. It was about sovereignty. Trudeau wasn't alone in his defiance. Leaders from across Canada, from Ontario to Nova Scotia, vowed to escalate their response if necessary. As tensions continued to rise, another nation was preparing to strike back: Mexico. Canada had already delivered its retaliation, but Mexico's response was expected to be far more devastating. Mexican officials wasted no time in crafting their counterattack. Although the full extent of Mexico's retaliation remained unclear, sources within the Mexican Ministry of Economy hinted at a devastating blow aimed directly at America's agricultural and automotive sectors. Mexico, the largest buyer of U.S. corn, soybeans, and pork, was expected to impose crippling tariffs on these vital exports, putting U.S. farmers, especially in the Midwest, under immediate threat. But the auto industry was where the real nightmare began. Mexico's manufacturing plants were deeply embedded in the supply chains of major American automakers like Ford, GM, and Tesla. If Mexico raised tariffs on U.S.-made parts or restricted supply chains, American automakers would be left scrambling to find alternatives. And then there was China. The economic giant that had already endured years of trade tensions with the U.S. was now preparing to escalate the conflict. This time, Beijing wasn't playing defense. With Trump doubling tariffs on Chinese goods to 20%, China was ready to retaliate in ways that would hit the U.S. where it hurt the most: technology and manufacturing. Chinese officials hinted at expanding tariffs on U.S. semiconductors, which would cut off a significant market for American companies like Intel and AMD. But the real threat lay in China's control of rare earth minerals. With China controlling over 80% of the world's supply, American tech and military industries were facing an unprecedented crisis. If China restricted access to these vital minerals, the U.S. would be left vulnerable, unable to produce everything from smartphones to fighter jets. The message from Mexico and China was loud and clear. This wasn't just a trade dispute anymore. It was an economic battlefield, and the United States was now on the losing side. The markets had already collapsed, trade alliances were fracturing, and the question now was how far Trump was willing to go. Markets can recover, tariffs can be lifted, but some wounds take much longer to heal. The first day of Trump's trade war had already erased trillions in market value, strained relationships with America's closest allies, and sent industries scrambling to prepare for the unknown. But this wasn't just a one-day panic. The consequences of these tariffs would set off a chain reaction, one that could reshape the global economy for decades to come. American companies weren't just sitting back and watching, they were already making moves. Major corporations began warning shareholders of lower profits, supply chain disruptions, and rising costs. General Motors and Ford braced for billions in losses, while home builders who relied on Canadian lumber prepared for a surge in material costs that would make housing even less affordable for ordinary Americans. But beyond the economic impact, there was the geopolitical fallout. The United States, once the epicenter of global trade, was isolating itself on the world stage. Canada had already pivoted towards stronger economic ties with Europe and Asia. Mexico was seeking to replace American imports with South American partners, and China was doubling down on its Belt and Road Initiative, strengthening ties with African and Middle Eastern countries. Despite the chaos, whispers from within the White House suggested that Trump may be willing to offer a path to relief for Canada and Mexico. Was this a genuine effort to de-escalate the situation, or simply another empty promise to calm jittery investors? One thing was certain. Trump had unleashed a storm that had forever changed the economic landscape. The U.S., once the undisputed leader in global trade, was now isolating itself at an alarming rate. Allies were no longer just considering alternatives, they were acting. De-dollarization, once a distant theory, had now become a survival strategy for many nations. They were accelerating their shift away from the U.S. dollar, forging new trade alliances, and cutting economic ties. What had once been a cautious rebalancing had now turned into an urgent necessity. The question was no longer if the world would move on from the U.S., but how quickly it would happen. Will Trump step back and stop the chaos before it's too late? Let us know what you think in the comments section below. If you want more videos like this one, don't forget to subscribe to our channel and hit the bell icon to stay updated. We've decided to bring videos on topics that no one talks about: politics, economy, and increasing global power. Thanks for watching, and stay tuned for the next video. Share your thoughts in the comments. Like, share, and subscribe to support us, and make sure you don't miss any of our updates.